Bank of England is saying stablecoins are the future. Do they have plans with Ripple to roll out a digital pound? Let's go ahead and get into what's new and updated here in the XRP space. We also have some more information and new updates here about ETFs and how much money could possibly be coming into them. We have some updates about liquidity. Ripple has a new digital asset custody in action, 3 use cases driving institutional adoption. Let's go ahead and jump into this information. So Chad Steingraber posted this. Bank of England stating that stablecoins are the future of money. RL Euro is coming soon. It says Bank of England Deputy Governor Sarah Breeden said stablecoins could be moving money across borders faster and less costly than the traditional system, right? The Bank of England is preparing to launch a consultation on its revised plans for stablecoin regulation later this year, softening its approach after the industry warned its initial stance was too tough. Breeden's vision for UK payments landscape is one of the multi-money mixed ecosystem where different forms of money play their own roles, maximizing utility for UK businesses and UK households. And so I wanted to see if there's an additional information here that maybe we're missing. Of course, we talked about the key context here. Stablecoins may allow more efficient and less costly international money transfers, highlighting their role as the future of money. When you have the Bank of England calling stablecoins the future of money, we should be paying attention to these statements. It'd be interesting, right? You have Ripple working with SBI to release the RLUSD in Japan, as well as a RLUSD. What would you call it? RLUSD yen backed, right? So RL yen? I don't know. What do you call it? I'm sure there's a better name for it, but you could have RL Great British Pound, GBP, right? And so I'd imagine they're trying to find a way to have all of this on one network, which would be the XRP ledger, in my opinion. The Bank of England is actively working on revised plans for regulating stablecoins and aims to gather public and industry feedback through consultation later this year in 2025, reflecting on a more accommodating stance towards tech as the technology evolves. The reference post also mentions the RL Euro, hinting at potential launches of regulated euro-denominated stablecoins. So not just pound RL pound, or maybe RL Euro as well. Remember, the Bank of France has tested the XRP ledger and often speaks very highly of the company Ripple and the XRP ledger. So you do know Ripple has friends in Europe, and I would imagine some of these central bankers talk with each other about what technology is the best and what works and what doesn't. Anyway, Ripple is known for its focus on improving global payments, partnering with financial institutions, and supporting tokenized fiat through stablecoins and CBDCs on its XRPL platform. While the Bank of England comments do not mention Ripple specifically, Ripple has historically engaged in dialogue with major central banks, including the Bank of England, about blockchain-based payment systems and interoperability. Ripple's recent business moves on ongoing work on institutional stablecoin infrastructure put it in a strong position to contribute to or benefit from any UK or European stablecoin rollouts, especially if regulatory frameworks mature in the coming months. Here is a clip about the Genius Act is causing a Cambrian explosion in the development of stablecoins. Let me play this.
And so I want to come back to the Genius Act. You mentioned some of the blowups and some of the potential risks that have been associated previously with stablecoin. But Genius Act how important did that become in terms of stablecoin adoption and usage, and I guess feeling less risk in buying stablecoin?
I think that the Genius Act is causing a Cambrian explosion in development of stablecoins, usage, adoption. There were so many people sitting on the sidelines that knew that this was a superior technology, faster, cheaper, easier, no third party to pay a toll to in the middle of your transactions, but they needed that regulatory clarity to do it. And I'm talking about the biggest institutions in the world. I mean, we have Western Union saying they're going to create their own stablecoin, the Citibanks, PNCs, Goldman Sachs, JP Morgan, all of them talking about either adopting an existing stablecoin or building their own on private networks. So I would say that now the confidence to use this superior technology is there and nobody's afraid to do it anymore. And it really is just that much better.
Listen, if a bank or institution wanted to build a stablecoin, we've done the math. We've already done all of the research on this. It would take minimum 12 to 24 months, longer term, maybe 3 to 4 years if you're building something from scratch. You got to figure out what you want to build. You got to bring in a team to build it. You got to develop it. You got to sandbox test it. Then you got to bring in partners. Then you got to grow it. It takes a lot of work to do so. And this is why companies will go to Ripple, they'll go to Circle and ask to use their infrastructure or help build a stablecoin. And this is going to start, allowing banks to move forward more quickly because this has already been done again and again and again. And Ripple is going to be in the business of helping banks, governments, whatever companies create their own type of stablecoins, right? They're going to be in the infrastructure business. A lot of people talking about the countdown is on. October 18th through the 25th is when we're going to get the SEC decisions on XRP spot ETFs. Now, you also are getting, Solana and a bunch of other hosts of tokens. My thought on this directly is we will see people buying into upfront before the ETFs come out. I would imagine XRP will start to tick up as people bet that the SEC is going to approve this. We don't know for a fact if they are going to or not, but the market is probably going to bet on that it will get approved because the SEC has done everything that they can to show they are a crypto-friendly SEC, and saying no to a spot XRP product would be bad, right? We would have to go through all of the rigmarole of suing the SEC, and I don't think the SEC wants to have any of heat on them right now. So you let me know what you think in the description, down below in the comments. Do you think they're going to pass this? Let's just get a little bit more information about how much money is under management from these companies. So Grayscale has 35 billion under management. 21 Shares has about 3.95 billion. Bitwise has about 15 billion. Wisdom Tree 128.6 billion. Franklin Templeton $1.62 trillion assets under management. That is the biggest one that I've seen on this list. Imagine if we get a BlackRock or a Schwab or something like that to come in with trillions under management as well. That could be the catalyst that really sends this to the next level. Other spot XRP ETF players as of September 2025, institutional products are largely centered around these firms. Canary Capital, remember the CEO, Mark McClung, says he believes first 30 days spot ETFs for XRP, $5 billion. We'll have to see if he is correct. Pioneering entrant leveraging a Delaware trust model. You also have companies building XRP related trusts too. So there's a lot of demand here for the actual token. Remember, spot products are what we want. That's going to help the price go up because that'll be buying fresh XRP off the open market. So here's Ripple's new document or publication or insight. Hello, it's right in front of me. Come on, Sensei. Digital asset custody in action. 3 use cases driving institutional adoption. Digital asset custody isn't just a back-end service. It's the confidence factor that transforms that hesitation into action. For institutions, secure and regulated digital asset custody isn't optional. It's the difference between stepping boldly into a digital future and watching opportunities slip by from the sidelines. Institutions are seeking a digital asset custody solution that delivers the same robust services and protections they've long relied on for traditional assets. Talks about seamless trading access, comprehensive risk management capabilities, and security. With 10% of the world's assets expected to be tokenized by 2030, we are witnessing the construction of today's financial market infrastructure. The banks that are establishing a robust crypto custody framework now will be the first to market digital asset services, while those who wait will be left catching up. Remember, banks are all going to be competing now for this business. If a bank's not offering crypto services to their customers, those customers might decide to take that money and go to somewhere where they are more welcomed. Remember, younger people more inclined to invest in the cryptocurrency market over the stock market. I think that is going to be a big institutional, divide between younger and maybe people a little bit older, my age, investing in the crypto space. What I'm saying, there's going to be a lot of demand for crypto over the next 10 to 20 years, and this is where I want to be. What does institutional grade digital asset custody look like when it's deployed at scale? It looks like Ripple Custody, enabling institutions to transform high-level digital asset potential into operational reality across 3 critical use cases: core safekeeping, stablecoin issuance, and governance. The foundation, core safekeeping. Every custody strategy begins with one fundamental responsibility: secure storage of the private keys that unlock access to the digital assets. From tokenized real estate to treasuries to stablecoins and traditional cryptocurrencies, this core safekeeping capability is the bedrock of institutional digital asset services. For the financial institutions, this foundational capability addresses the most fundamental risk in engaging with digital assets: the permanent loss or unauthorized access of private keys that control potentially billions of dollars in assets. Demand for institutional grade security is climbing as banks lean on digital asset strategies, launch stablecoin initiatives, and serve clients who increasingly expect access to use digital assets in payments, hedging, and portfolio diversification. And with crypto assets under custody projected to reach 16 trillion by 2030, meeting the rising demand requires a custody solution that prioritizes security while balancing utility. Institutions need a system designed for security, scalability, and compliance. That is where Ripple Custody comes in. Remember, Medico Custody and Ripple Custody are 2 different companies. Now, you can go to either one of those companies. I do believe Ripple probably developed some of their technology through Medico when they bought them. But for the longest time, I think people may realize thinking that Ripple Custody and Medico are the same thing, 2 different companies, just so you know. Software as a service, a secure, scalable cloud hosting platform for institutions to manage and store their digital assets without building their own complex infrastructure. On-premise institutions build and maintain their own infrastructure, retaining complete ownership, governance, and control of data and processes, ideal for strict risk compliance and regulatory requirements. Listen, I'm going to leave the rest of this down below. If you want to take a look at this and read through it, please do. A lot of great information in that insight. Ripple escrowed, XRP relocked. Here's the history, 2025. This is how much XRP 1 billion was unlocked, and this is how much was relocked. Notice there's 700, 700, 700, 670. What was that 30 million extra? Where did that go? And then 700 million. And then even 2024, they were locking up 800 million. So Ripple is relocking up a lot of this crypto if it isn't spoken for. So a lot of people say, Sensei, some people believe that all the escrow is already spoken for through NDAs. Now, if that was really the case, why is Ripple relocking more than half of it back up? They're relocking 70% back every month. This XRP would be promised to other people, right? That's just how I'm looking at it. I might be, you might not agree with what I am saying here, but this does make me believe that there isn't these NDAs and all this XRP is not, if it was spoken for, the companies that bought it would have asked for it, right? Why would they have Ripple continuing to hold it in escrow where they can't access it? Because once they relock it, it's relocked for the next like 3 or 4 years. I don't know, man. Massive XRP moves alert. So here's some massive XRP that was moved around the last few days. This is September 3rd, today's date. This will come out on the 4th. Massive XRP moves, 200 million XRP, 553 million, 300 million XRP, 830 million unlocked at Ripple, 500 million unlocked from unknown wallet, 1.38 billion. Imagine 500 million XRP. Oh my goodness. And then you have 400 million locked at Ripple, 300 million locked at Ripple, 200 million and plus 300 million XRP moved from unknown wallets to Ripple. Man, people want Ripple, hold my XRP, please. Wait, it's $1 billion. Hold it. What does this all mean? The sudden surge in large XRP unlocks, relocking, and whale transfer alerts likely signals strategic liquidity management by Ripple and active positioning by major holders, often in anticipation of an institutional adoption, heightened utility, and upcoming market events. Ripple routinely unlocks 1 billion XRP from escrow each month, but typically relocks 70% to limit net supply increases. Only about 0.05% of total XRP supply was effectively added into circulation. This controlled supply approach aims to avoid market shock and stabilize prices, aligning with Ripple's goals of predictable liquidity for cross-border payments and institutional use. It does talk about whale and unknown wallet movement. If you want to pause the screen, I'll try to link this below for you, but if you want to pause the screen and read through it, please do. I'm just not gonna. Digital asset investor and digital perspectives. Man, these guys love each other. Bitcoin, 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 Ethereum, Bitcoin, Ethereum, Bitcoin, Bitcoin, Ethereum, Bitcoin. If you repeat a lie often enough, it becomes accepted as the truth. Joseph Goebbels. I don't know. Let's ask Lexi. Okay. I don't know if we should be quoting that, but all good, man. Whatever you want to do. Anyways, Bitcoin, XRP, and Ethereum. XRP trailing 12-month return. What are people posting on X? Jim Thorne predicts a huge rebound for crypto heading into the early 2026. Let's just play this and end it.
There's going to be liquidity and people realize that, the market is going to go higher and there's risk assets. And then, Charles, and I think you've been talking about this for a period of time, is Wall Street sold the bottom. Wall Street is underexposed. And so like in 09 or 03, we're going to have a massive catch-up trade between now and the first quarter of 2026. And so, yes, AI is great, but at the same point in time, small cap, retail, home builders, everything is going to have a massive catch-up trade. And so what I would be suggesting your listeners to do or your viewers to do is expect the breadth in the market to increase over the next 4 to 6 months.
Guys, listen, in history, if we look back in history, rates usually drop. They start printing money, QE. It's time to get into risk assets. That's just what I've seen, looking back at different historic times when we've done certain things like this. But do realize that eventually, when you start printing money and inflation is already rising, that will catch up to us in 2026 sometime. And imagine the data over the next few months will start to show weakening across the entire US economy. I am paying close attention to that. It might be a sign for me to take some profits and see what happens. But I will keep you updated on my thoughts. I hope you enjoyed this update. Thank you so much for being here. Leave a comment down below. If you like the video, you can like it, you can share it. Nothing in this video should be taken as financial advice. This is for entertainment purposes only. I am not a financial advisor. Please seek financial advice if you need it. Let's get back to the video.